Hey everybody, it's Matt Faircloth here, and it is Mentorship Monday. Thank you for watching. Happy Monday to you. Go get them. Have a great week. But before you do, watch this and let's learn a little bit about some real estate. Today's question comes from Charles, and Charles is down in the Atlanta area. Charles, thank you for your question. Charles is 26 years old and was looking to build up his investment game by starting in some small multi and then scaling up into larger projects. And Charles is dealing with something that I think a lot of folks deal with, something I dealt with in the beginning of my real estate career, and that's what criteria should you consider when you're looking at a real estate market. So there's a lot of different things you should look at, but what are the key factors, major and minor, that should be considered when looking at a real estate market? So he listed out some really, really good ones here, and you guys should take note from our friend Charles here, who did a really good job for what should be considered. I only added a few to his list, but what he had already, are there jobs coming to the area, and if so, what kind of jobs? And all you want to do, what that really is just tracking the employment rate and just tracking overall job growth. And there's, let's see, median income. Is a website called Good Block, Bad Block that you can get that on. Also, citydata.com. Those are two websites you guys can use to get that data. Population trends, that's all on those websites too. Employment rate trends, I already said that, although he worded it differently here. What percentage of the population are renters versus owners? So call that the ownership rate in that area. It's interesting. You find that B areas have a lot more home ownership. C areas, it's like a 50-50 or less percentage of homeowners to renters, is what I find. Crime rate, it's very interesting. It's something you should consider. If it's above a higher rate of a higher level of crime around the building, it's something you're going to have to deal with. You're not going to be able to completely change a whole neighborhood by buying an asset. You're going to be subject to that crime rate in around your property as well. Good school districts, especially if you have more than 2 bedrooms in your property, because people with more than that rent more than 2 bedrooms typically have kids. A lot of people that rent 2-bedroom properties have kids too, but 1 bedroom's not so much. Depends on the bedroom count for the unit that you're looking at. I threw in the landlord-tenant laws for the local area. That would require you interviewing a local attorney, asking them how favorable is the area for landlord tenants, getting to know the area with regards to proximity to larger cities or proximity to large amount of jobs. The jobs don't have to be in the town that they're in the town that you're investing. They could be just very close to jobs. So just proximity to large employment centers. The other one, and this is a combination of a few things, but I call it the affordability index. And what that is that's looking at the median income and saying, okay, the median income is, let's make up a number, 35,000 a year. Okay, well, what is the average rent based on Renometer or based on the area? And you got to do your rent comps, and that's something that's not on Charles's list. It's just what's the average rent in that area. So you want to compare the rent in the local area to the rent in your building and see if you're at market, below market, or even above market. That'd probably be a bad thing. And you want to look at the median rents in the area and the median rents of your building and see how affordable the complex in the area is. So that means looking at that median income. Our standard for rental is 3 times the rent is what the person should be earning, or more, of course. And so if the person is making 35,000 a year, you divide that number by 12. Let's do it real quick. Let's divide 35,000 by 12, and then divide that number by 3. So that means that person could afford $972 a month in rent. The average person at median could swing $972 a month. That's an interesting conversation. Now, what is the median rent? Is it an affordable area, or are rents squeezed up into the median income? That's probably not a good sign. And what's the rents for your complex? Is your complex considered to be affordable, not affordable, basis to median income? So you want to see an indicator that's based on your standards. Again, our standards are 3 times the rent should be the person's income in that. So that's that. Charles, thank you for your question, and it's good. And I hope wish you the best of luck with your buying some small multis and trading up at some larger multis, which are your goals that you listed out here. So you're awesome, Charles. If you guys have questions you want to submit to us, email them to helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com, and we will answer them right here on the YouTube channel for you and everybody else to learn from. And I appreciate you guys watching. And so submit us an email. Go out there and slay some dragons this week, guys. Have a great Monday and a great week. And as always, have a good and profitable week, guys. Take care.